many sights to see.
Hello traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is April 16th, Friday, and this is the Weekend Review. What a week we have had in the market, no doubt. Gold is currently trading at 1136.50 under extreme pressure today, at one point down almost $30. Some very interesting scenarios brewing. We'll talk about it in a bit. Just let's recap the week. For those of you who have been taking the trade, you do recall that on the 25th of March, we did enter a long position in the market at 1097. That's approximately at this point here. We then began to trail stops up, and at 1145, we actually added positions right in here, a little bit higher, of course, and then we trailed our stop up to 1149. That's going to be right here. We were stopped out of that trade on this particular candle here, and that is our hangman. I based it upon the pattern that you'll see prior to that, which is this dark cloud cover. And the 3 days prior to today's trading, we had an interesting scenario. We had three very, very strong consolidation candles, and let me look at them right in here. The first one was the hangman, then we had the shooting star, and then the long-legged doji. As I explained on yesterday's daily forecast, those three candles are ultimate consolidation candles. What it means is there's a basic power shift between the bulls and the bears. In this case, because the market had been rallying so strongly to the upside, the power shift itself is going to be a power shift where the bulls relinquish the power and the bears gain some sort of a control. Well, today we certainly saw the bulls lose their ability to push the market higher. We saw bearish sentiment enter into the market, stronger U.S. dollar, much weaker crude oil prices, and a stock market under heavy pressure fundamentally was what we heard as the reasons for this sell-off. A couple of interesting things. We're going to look at Fibonacci later. We've been talking about it all week. It went right to the point in which we were looking for it to possibly fall. If you've noticed, I've put up our Fibonacci retracement sequence that we've been looking at all week. Some of the key areas and the areas that we found very, very critical, this 1166 is our 23% retracement. And then our 38% retracement is right around 1133. I find it kind of interesting that what we witnessed today was the market selling off. This is our low of the day, just below that Fibonacci retracement level, and is currently above that at 1136.93. I have mentioned before that I'm not a seller in the market. I am looking to buy the dips. Fundamentally, I am bullish long term. Well, traders, we have certainly seen the dip that we've been waiting for today. Getting out of the market in this one particular area, meaning at this point right in here, earlier this week, looking at it in hindsight, was obviously a good move. But we had been trading in a very, very narrow consolidation pattern, and I really was looking for it to break out one way or the other. That's what I talked about on yesterday's daily forecast. We've gotten our breakout to the downside. We are currently trading right at our Fibonacci retracement area. And so what I'm going to be looking for is Sunday to re-enter the market from the long side if I get a candlestick pattern that is indicative of a buy. The setup seems to be quite good right now. It's approximately 10:30 here in Honolulu, Hawaii, so the market is just getting ready to close up. A little bit left. New York is already closed. We see the market trading higher as we speak. It looks as though, whether it be short covering or fresh buying coming in the market, that we are looking at a scenario where this market has tested a bottom and we have seen buyers come into the market. Should we enter a long position here at this point? Well, traders, I'm a conservative trader in a very volatile market. I am going to look to re-enter and position ourselves into a trade on Sunday's trading based on the activity that we see then. All in all, we've had an excellent week. Looking at it in hindsight, we did exit the market at a very, very good point. We exited, of course, up here at 1149, so that's right here on our protective stop. The market, of course, is trading lower. It did trade higher, but it seemed to run into superlative resistance right at this one Fibonacci level in terms of retracement. So that I think all in all, we entered the market obviously at a good spot at 1097. We exited at a good spot. Let's see what the market's going to bring for us on Sunday. And traders, as I said yesterday, I'm looking to buy the dips. I think that we probably have seen the dip that I'm comfortable buying. However, one day does not make a trade. I want to see how it reacts. Am I looking for it to go back and test 1105, and that's our 50% retracement? As of right now, I'd have to say no, but I want to see what the weekend's going to bring and if we get carry through as traders digest this information over the weekend. This has been Gary Wagner with WFGForex.com, your daily market update for Forex Gold. This has been the Weekend Review, and traders, I'm wishing you one thing. As always, good trading. Bye-bye.